What's up, guys? It's September 7th, 2023. We're going to do the daily breakdown of the MES. We'll start off with yesterday, as always. Yesterday, we had a strong downtrend. Bears got multiple flags, and we sold off from about half the day and had a midday pullback, maybe midday reversal. Strong trend into a 50% pullback. We ranged at the end of the day, we started to range here. On today, September 7th, had a big gap down, so automatically I'm thinking this is a bear bar. Bears have strong momentum, but the first bar of the day is a bull bar, so that tells me that bears are not shorting lows, or at least bulls are, or they could be taking profits. I'm not gonna say this is bulls buying lows. This could be bears taking profits. 3 bars up generally means good pressure for the side that gets it. So bulls have 3 bars up, far below the EMA. Bears are not willing to short below the EMA. I think there are more buyers willing to sitting at lows. This is the low of the day. Bulls get 3 pushes up, and bears get 2 legs down. 1, 2, and a failed breakout. The body of candle 1 is right there, so bears get a failed breakout and bulls get a micro double bottom for another push up. Bulls fail to make a new high, and bears are, I think the market has more sellers with this looking like a bear flag. I think the market is seeing this somehow as like a bear flag. So there was more sellers sitting here at range highs before the rest of the day got put in. This was range highs, and that brought the market back down to another failed breakout. And this created a wedge bottom. In range-bound environments, final flags can fail. So here, if this was a bear flag, and a double top, bears get trapped on the failed breakout because this is a pretty good looking nice flag, momentum, lower highs, a lot of wicks. I think a lot of bears got trapped here because they went short here, got trapped, go short again, add to their position. Market's not selling. Bulls are buying lows because this is laced with buy orders now. From bar 1, we already know we see strong buying, so the next time it visits the price, we can see it again in range-bound environments. Bulls buy lows, and we snap up into the EMA. We create a new high of the day. What bar number is this? I'm going to turn off the bigger EMA. Okay. Bars 14 and 16 push and break out on the EMA. I actually bought bar 14 because bar 14 broke out from the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. 1 bar took out 10 bars range. So I bought this as a breakout, and I expected a continuation to the gap fill. I already had a position from the lows, so my entry was 50% of this bar. Bulls get 3 pushes up, and that creates a wedge top bull flag. I think this is climactic, and the market wants to start to sell. 1 leg, 2 leg, 3 legs, and it fails. Bears put a bar below the EMA, but bulls put a doji in, and this creates a double bottom flag. The low of 16 and the low of 30 create a double bottom, and the bulls do get a good rip up from the low of 30. They make 10 points. In an earlier video, I talked about how the market moves in 10-point swings, and we can kind of see that here today. Let's just measure some real quick. So that's a 15-point swing. I think that was 10 bar to bar. I do bodies, so 12. I think bears made 10 here if they market order. Almost 10 if you get short right away. Limit order traders tend to make more. See, this is a limit order 10 points, but a market order 5 points. So it depends what you're doing. And let's see another 10-point swing here. 5 for the market, 10 on the dot for limits. And I didn't trade this because it was just getting too crazy. I was exhausted trading today. I got trapped trying to catch this was my PT all day. I was buying lows, and then I got pinged out at break even on bar 60. I was on tilt, and I slammed 10 lot, got my money back, and I caught it for the day. But back to bar 30 to 36 is steady buying. You could buy the close, buy the low. It is climactic as we just had a failed breakout. We're making a new higher high, and bears short back to the EMA. Bulls are keeping the price above on the EMA at least, so the market is agreeing on this price right now. Bars 42 to 46 is a range, a tight range, and they have a breakout retest. They break out with bar 46 and retest back with bar 52, and they don't get long. I was holding my position through this whole thing because I was looking at this like a rising wedge or something. I was looking at it like that, and I was expecting a squeeze, a vacuum up to the price, and that's when I got trapped because I was married to my position. You guys can see this bull flag kind of, with this being the pole, and then this, you guys can see the flag now, if you see what I'm seeing. So strong breakout above a high, not strong breakout because it failed. Weak breakout above a high here. Let me get rid of these lines. Breakout above bar 36 and it fails with bar 56. In range-bound environments we fail and the market goes back to test the range extremes, and bulls actually were able to keep the gap open from bar 18 low. This being a bull gap. Let me delete these lines. We don't need this anymore. And we range for the rest of the day. They kind of got another flag here. They got a flag-ish here. Pull back, high one. But you had to sit through about 20 minutes of bars for a couple points. I don't think it's worth it. This part of the day can be seen as algo trading. My mentors tell me to just stay out of it. I study Price Action by Al Brooks. I definitely recommend if you're interested in my breakdowns to check out Al Brooks and what he does for a deeper, in-depth look, and check out his course. If you guys learned something today, don't forget to hit the follow button. I'm pretty sure this is a glitch, but there's a crazy gap up. So that's crazy. I'm sure that'll get fixed. Anyways, use your stop loss. It's Friday. I'm always hoping for a trend, but trade what you see. Have a good day, guys.